Hey guys, Chris Peshek, broker associate, Peshek Properties here. Jumping into another episode of Passenger Seat Real Estate. Basically, if I've got something on my mind, what I do is just kind of talk about it as I'm driving, like you're sitting here in the passenger seat with me. Just got out of the Austin Board of Realtors Central Texas market forecast update, whatever. Want to kind of download while things are fresh on my mind. Had a really good panel. There was a chief economist from Austin Board of Realtors, Core Data, who is a housing and real estate data conglomerate. They had their economic advisor there, and then Mark Sprague from Independence Title, who, if you guys have paid attention to me before, you know I'm a huge fan of Mark Sprague's, and I take what he says very, very seriously, just because I've been following him for 12 years, and the guy that I know of just isn't wrong when it comes to housing and real estate in general. He's a former developer all over Texas, and more specifically in Austin, and he's been doing this for a long time. So, you know, when he talks, he's kind of like E.F. Hutton. If you're old like me, you remember when E.F. Hutton talks, people listen. Yeah, that's Mark Sprague. And so, you know, they talked for a while. Then we had actually Kirk Watson was on stage, and, you know, for political differences that I've got with him, Kirk Watson was a really good mayor for Austin and got a lot of stuff done back in the day. And he ran again last time and was elected back in after he took a several year hiatus. And I think it's going to be good for Austin overall to have him back in, because right now, honestly, development in Austin is a shit show, and it has been for a long time. One of the major things, and I'll go off on a little tangent before I come back to the housing forecast. One of the major things, and I deal with developers and with engineers that are working, well, let me rephrase that are trying to work with the city of Austin. And oh my God, it's miserable. And one of the things that Kirk Watson said, Mayor Watson said, was that the development process for each review has like 1,470 steps. And on average, a development will go through that review process 5 times. He said it takes 20 employees a week to get through one review on one property. So basically, every property that goes before the city, it's going to take them a month. It's going to take 20 employees a month, if it were a concurrent thing, you know, an in-step thing, to get through a development for one damn development. City of Austin's huge. City of Austin is, I think, the 10th largest metro in the United States now. So you can understand how many developments are being brought before the city of Austin, and it's taking them over a month to assign. It's taking 20 people over a month to go through each one. Yeah, that's an inefficient process, and they're trying to bring that, you know, basically get a hold on that and make that process a lot more efficient. I mean, Mayor Watson, my suggestion is get the people who make those decisions, get your planning and zoning people back in the freaking offices and get them the hell out of their houses, so you can actually keep an eye on them. And if they're not doing their jobs, you know, get their ass on a short leash and then get them gone. That might help. But anyway, I won't digress too much on that point. But hey, at least we've got somebody who's saying that they're doing the right things. We'll see what happens. Hopefully he'll have the success he had last time around. And again, politics aside on that, you know, maybe we'll get some movement in development in this town. The big takeaways from the panel and Core Logic and all of that is, overall, City of Austin, we've seen a little bit of a price correction over the from the high of essentially May of last year, 2022, to the low of February in 2022. We saw a dip in overall Austin MSA. That's not micro markets, and there's been bigger dips in some and smaller dips in others, and that's just the fallacy of the mean, right? We're going to see that in data. But overall, the Austin MSA was down about 11% from the high to the low, But this year, we're already trending back up. And y'all seen me talk about this on other shows. If you have not seen me talk about this, you've got to start following me on YouTube and Facebook and LinkedIn, because I talk about this stuff in real time when I get this data. That's what I do. I love data, right? So it was about 11% down from the high of last year to the low of this year, but it's been kind of scooping up. We're seeing, as Mark Sprague puts it, we're seeing fish hooks where we're coming up, little lulls and pop up, little lulls and pop up. And overall now, from the high of last year until where we are now, we're only down about 9.7%, I think they said. So we've seen that overall reduction in 11% of median value has started to come back up, and we're down below 10. So we've improved over 1.5 or 1.5 percentage points from the low to the high this year. Okay, so what does that mean? It means the same thing that I've been telling you for almost a year now, where the economists are all telling us the same thing. Look, this is the ABOR economists, and I understand it's the Austin Board of Realtors, right? So they're going to skew things to try to make it seem like the housing economy is good. I get it. And I'm a realtor, right? My job is to sell properties, but I also try to give you the best data. So Austin Board of Realtors is telling us, okay, housing values are continuing to go up. That's what I was saying. If y'all went back to the last time I talked about what Mark said in January of this year, our values are going to continue to go up. Why is that happening? Well, we're still supply constrained. Our available resale is just people who absolutely have to get out of their houses. Nobody's willfully selling their houses and getting out of 3 and 4% interest rates just so they can go buy something at a 6.5 or 7% interest rate. That's not happening. So our resale is constrained a lot. And what's driving our market right now is our builder inventory. Builder inventory is high, even though they stopped producing houses for 6 months. Okay, we talked about that in January. Building starts, Mark told us in January, building starts are going to be down somewhere around 50 to 55% in this year. And that's exactly what happened. So even though builder inventory is high, there's still not enough inventory moving forward from this year into next year to take care of the reduction in the resale market. So there's a lot of new construction that's being sold. New construction builders are still offering lower interest rate than what is the market average. They're buying down interest rate in tranches. I think right now they're somewhere around 5.5%, and this is July 2023. I think they're around 5.5% roughly, when our normal, I'll say normal interest rate, I'm not a lender, so I won't get in trouble for this, but I've been seeing normal interest rates for most people at around 7.5%. So builders are still buying down around 2 points overall. And so, people that are moving to the area and wanting to buy, okay, they're trending towards new homes. And so that's causing these, and I just mentioned resale, these are people who have to buy. So that's causing those people to take price reductions because they just can't offer a 2% interest rate incentive. They can't offer that. So they're dropping their prices and dropping their prices. So there's a lot of dynamics going on right now with the housing market, but basically new home inventory is forcing down the resale inventory value. Because look, if you've got a $500,000 resale and you've got a $500,000 new build, and they're identical in every way, shape, or form, but the new build is brand new and they're also offering you 2% interest rate reduction, well shit, you're gonna go buy the new build, right? You are not going to go buy that resale. So the resale is being forced down, and that's why you see those price reductions in resale right now. So that's kind of what's happening in the housing market. Looking forward, every one of the economists to a person has said, this is the same thing that I told you in January. We are not going to have enough inventory in Austin, in Austin MSA. Again, call it Kyle Buda to Georgetown and west from, hell, at this point, it's kind of Johnson City and then east to Smithville. That's kind of the Austin MSA, right? We are not going to have enough inventory moving forward to take care of the demand. We had Opportunity Austin in talking about everything that they're trying to do to continue to drive industry in. We've got the huge industries. We've got, SpaceX and Boring Company and Tesla. Samsung has already doubled the size of what they're building in Taylor. And now Opportunities Austin is going to spend something like $30 million over the next 5 years to try to force more industry into Austin. And we're still growing at about 180 people a day. We do not have enough inventory for those people. So what I'm telling you is, moving forward, even with interest rates being where they are, and look, I'm not going to lie, the ABOR economist was saying that they're expecting interest levels to drop to the low to mid sixes by the end of this year. I'm personally calling bullshit on that. I'm not going to go into it, but if you watch our Monday show, me and Steve, I don't see it happening. And especially, I think this week we're probably going to see another 25 basis point increase by the Fed, even though everybody was saying the Fed's going to freeze. That's not probably going to happen. So I'm calling bullshit on a 1% interest rate reduction by the end of the year. We may see 1% in the next 1 year, like by the middle of 2023 or maybe or 2024 or the late part of 2024. More likely we're looking at like a year to two, maybe 2.5 to see a significant reduction, like down below 6%. But that doesn't matter. We're still having people move into Austin. And I'll share another thing with you on all of my channels. ABOR is going to great lengths to prove to people that home ownership is still a better investment than investing in stocks. And it bears out for new homeowners that their analysis, and the analysis was solid, guys. There's statistics, damn statistics and lies. But when you look at their methodology, it bears out. But they're saying for new home buyers, 4 out of 5 times, looking back to 2007 and then looking forward for the next 10 years, 4 out of 5 times, new home buyers are going to be better off investing in a home than investing in the stock market. Move up home buyers, it's basically 9 out of 10 times they're better off reinvesting in real estate than the stock market. And luxury buyers, it's essentially 10 out of 10 times are better off investing in real estate. So that impetus is still there. Growth in equity and overall just growth of a portfolio I can't think of the right word that I'm trying to figure out right now. The growth of one's portfolio and the value over years is still better in real estate than it is in the stock market. And I'm not going to get into all the little nuances and day trading and equities and all that other shit. I'm just telling you what was presented to us today. And I can't find a lot of flaws in that data. So moving forward, what do buyers do? I've been telling you now for the better part of 8 months that the people that I'm dealing with that are buyers right now are investors, because investors understand, if you've heard me talk before about be the fireman, okay? Firemen are hauling ass into a burning house when everybody's running out. Okay, so what's happening in real estate right now? Buyers are going, oh no, interest rates are too high. Oh no, I don't know if I should buy. Investors are coming back in. And then when the market turns and buyers go, oh crap, I should have been listening to Chris, because housing prices are still going up. So even if interest rates are staying the same, it's going to hurt me to wait to get into this market because my prices are still going up. It's going to be harder to qualify even more. So I should have been buying over the last year like all the investors are. And when the buyers start going back in, the single family resident home buyers, people who are going to live in that home, when they start coming back in, the prices are going to go up even more, and the investors are then going to take their step back. They're going to be the firemen. When the homeowner starts going back in, the investors are like, nope, it's time to get the hell out. And they know how to make money. So I know it sounds like I'm a used car salesman telling you, oh no, buy a house because that's how I make my money. Guys, I challenge you to call bullshit on anything that I'm telling you. Could I be wrong in 6 months? Yeah, potentially. Will I be wrong in a year or 2 years or 10 years? I highly doubt it. And if I am, I'll be the first one to say it. But again, with the way our economy in Austin is growing, we're still a top 4 economy in the United States in terms of growing jobs and wage growth. We're still in the top 4 solidly, if not number 1 in all of those metrics. People are still coming into Austin. So how is our housing market going to continue to drop, or how is it going to drop significantly if we're still having people flood into our housing market, if the city is trying to generate more industry coming in and they're trying to diversify that industry? How is our housing market going to drop? Outside of something catastrophic, I don't know how it happens. So I'm telling you, I'm begging you, if you want to invest in real estate, Austin's still a great place to invest. I know the pricing doesn't work right now in a lot of places, but if you can find good investments, and I can help you with that, in the long-term equity play on this, you're going to be doing pretty well. And the same, if you're renting or you've been wanting to do a move up or a move down or something like that, guys, yeah, I don't know. I don't know what to tell you. Long-term growth in Austin is still looking strong. Is it a projection? Yep. Could I be wrong? Yep. Am I listening to people who are a hell of a lot smarter than me and people who have been doing this for a lot longer than I have? Yep. I'm not smart enough to figure this stuff out. I'm just relaying what I'm learning from people that I trust. And yeah, that's kind of it. Oh yeah, and the other thing, am I passionate about this? Yep. I'm not selling any of my Austin real estate holdings anytime soon, and I'm not selling any of my other real estate holdings outside of Austin anytime soon, because I know that moving forward, that equity is going to continue to grow. That's kind of key. That's kind of key. But anyway, guys, if this is the kind of content that you like, make sure you're following me. If you want me to add you, guys, I send out a monthly real estate update. It's not as detailed as this because I don't get this information all the time, but I do send out monthly email updates on Austin and the Dripping Springs market specifically. But even if you're in another market outside of Austin, you want something more specific, tell me. If you want me to include you on that stuff, you can DM me, give me your email address. I'll put you in, and if you think it's spammy, you can unsubscribe. That's not a big deal. But I actually believe in bringing value and giving you data. That's who I am. If it's not a good time to buy, or if there's a market that it's not a good time to buy in, I'll freaking tell you, because I'm looking for long-term relationships in real estate, and you don't develop long-term relationships by steering people wrong and pissing people off. It just doesn't work very well. So anyway, like, subscribe, follow. If you've got questions, or if you think I'm full of shit, tell me in the comments. I am more than happy to put data up against other data, and I might be wrong. You might be able to share things with me that would change my mind, and I really welcome that, because all I have is data, and I dig it. I dig honest philosophical discussion and data forward discussion on our housing market. If we're going to argue that, I'm game. If you just don't think something is right that I'm saying, okay, I'll listen to you. You could change my mind. But if it's not data driven, the chances of you changing my mind are pretty slim to none. Anyway, cheers.